Thank you everyone for joining today. I want to start with a couple of reflections from my first 8 months as president and CEO of Nokia. I rejoined Nokia on August 1st last year. Straight away, I told investors that I would like to take a bit of time to refamiliarize myself with the company and the market before making any big changes to direction. And that's what I have done. Over 150 calls with customers and partners, around 20 town halls, almost 40 opportunities to speak to our investors. I wish I could have done it in person, but even so, I have been energized to talk to so many people about Nokia. And what I have learned during those conversations is that this really is a great company. Our people are passionate about us and about our purpose. We have the trust of a wide range of customers, governments, and other stakeholders. We have world-leading technology. Comprehensive leadership in IP routing, thanks to our software and FP4 silicon, which you actually see on this screen. 25 gigabit per second passive optical network solution. Private networking. The best 4G performance globally. The world record 5G speed achieved together with our partners. And an industry-leading patent portfolio with more than 3,500 patent families declared essential for 5G. There's a lot to like. But I have also learned that there's plenty of opportunity to get even better, based on our unique market proposition. We've been selling connectivity since I was at Nokia for the first time in the 1990s. We have decades of experience in building high-performance, reliable, trustworthy networks for our CSP customers. Networks that are now able to underpin mission-critical activities. And this is what we call critical networks. Now we are able to bring that expertise to enterprises and web scales too. Here you see the target addressable market for those segments in euro terms. As you can see, the CSP market is broadly flat. There are nevertheless important dynamics within the overall market to understand. In addition to 5G driving growth by taking spending from 4G, there are some good pockets of growth, including IP routing with close to 3% CAGR, total fixed wireless access with 32% CAGR, managed security with 15% CAGR, and network cognitive services with over 8% CAGR. While the CSP market is flattish, for enterprise and web scales, the market will grow at around 8% CAGR between 2021 and 23, becoming almost 1/5 of our total addressable market. The private wireless market specifically is showing 35% CAGR. Nokia is unique in our ability to approach all three segments with compelling offers. Today I would like to talk about how we are doing that, starting with the opportunities and trends we see, then how Nokia is evolving, and finally what our future path looks like. Then I will hand over to my group leadership team colleagues who will focus on some specific parts of that journey. But let's begin with those trends. And I would like to highlight two highly relevant ones. First, next generation access. Based on our assessment, the 5G market won't look like 4G, which had a steep acceleration to a peak and then a steep fall. 5G will be more stable. In fact, we estimate that the peak of the 5G market will last roughly twice as long as the peak of the 4G market. And we are still a long way off that peak. The 5G cycle is in a very early phase. The radio market will triple in EMEA and double in APAC over the next 3 years, while North America will grow by half during the same time. Overall, the 5G radio market is expected to be worth $26 billion by 2023. We are accelerating to seize this opportunity. Of the total value that operators moved from certain suppliers since 2019, we won approximately 50%. We currently have 196 commercial 5G agreements. We are forerunners in network slicing and offer 100% digitalized 5G network deployments, speeding up delivery by 35%. And we are making good progress with securing full portfolio competitiveness in mobile networks. But it is important to note that 5G growth comes with a few strings attached. In a word, fiber. For mobile 5G, operators will use small cells to densify the network and improve coverage. But that requires a transport network that can carry traffic deep in the networks. Using existing fiber to the home fits the bill. It matches the expected 5G small cell footprint, it performs well, and the economics make sense. This is fundamental to the gigabit world. In addition, backbone networks need to be optimized through transport technologies. We have a unique opportunity to drive this evolution. In transport, we are number 2, excluding China, in CSP IP routing, with exceptional performance from our custom silicon and software. In addition, we are number 2 globally in IP edge routing. For optical, our investments in coherent optical technologies, silicon photonics, and automation have positioned us as top-tier vendor. Based on shipments, we are number 2 globally in the fiber-to-the-home access network segments that we address. We are already today number 1 in 10 gigabit technology with XGS-PON. We were the first vendor to commercialize an end-to-end solution for 25 gigabit PON, and we were also the first to showcase 100 gigabit technology. 5G fixed wireless access is in its early days, and it is expected to grow at 100% CAGR through 2023. So there is strong demand for our solution. It's a great opportunity to lead in a fast-growing market. So with a strong position in fiber, transport, and an improving position in 5G, we are clearly contributing to the gigabit world with more to come. Some of you will remember my statement from October last year that we will invest whatever it takes to repeat our 4G success in 5G, and I still mean it. The second trend I want to highlight as key for our industry is connected digital enterprise. One of the key technologies used today is 4G LTE. Many rail networks use a Nokia private LTE network to underpin operational communications, as does the world's largest iron ore mine, a household name logistics company, and many other customers across different sectors. And they lead to great results. Some examples include assembly line productivity up 15%, overall equipment effectiveness in factories up to 20%, and imports a 40% drop in staff injuries. So yes, 4G LTE works, but 5G can do even more with its high performance, ultra-low latency, and mission-critical capability. The figures I just mentioned can even double with 5G compared to previous generation technologies. For example, one of our big mechanical maintenance customers has installed 5G in its factories and says the high quality, high reliability, real-time video streaming capability alone has been transformative during COVID, allowing them to do 100% of inspections remotely. Looking broadly across the sector of CSPs and enterprises, we have identified at least 4 big opportunities. First, software. In order to make the most out of your network, you need the right applications with the right capabilities, collecting, crunching, and actioning data. Second, network slicing, which allows infinite network customization. This is hugely attractive to enterprises. Slicing as a service allows enterprises to buy automated, customizable network slices in a matter of minutes, not months, with assured security and performance. Third, network automation which leads to cost benefits and reduced time to market. In fact, before too long, operating a network will be impossible without extreme automation. We foresee fully automated problem detection and correction, error prediction and prevention, and self-configuration. And fourth, security solutions which are becoming essential as network disaggregation accelerates and more countries pass data security laws. Machine learning and AI-based pattern recognition in real time are becoming necessities. These developments bring with them a significant value shift to new business models. This value will be captured by those enterprises who adopt them early, and by the vendors with the technology leadership to serve them. And momentum has further accelerated over the pandemic. COVID has increased demand for next-generation products and services and exposed the big gap between digital haves and have-nots. Our research shows that 5G mature companies are the only category of business to have experienced a net increase in productivity immediately following COVID, around 10%. Every business now realizes that if you aren't serious about digitalization, then you risk being left behind. As a result, we are seeing a global boom in which over 70% of large companies will invest in 5G over the next 5 years. We are addressing that appetite with mobile networks offering the leading private wireless solutions, according to multiple analysts. While in our network infrastructure business, the IP routing and new data center switching portfolios and select optical and fixed network offerings are seeing strong demand from web-scale customers and enterprises. And our cloud and network services business is addressing the value shift towards faster growing emerging opportunities such as 5G core, managed security, and private wireless, which are critical for both our CSP and enterprise customers. Alongside these two opportunities of next generation access and connected digital enterprise, there is something else, something worth keeping in mind: continued pressure on cost per bit. In short, recent traffic growth has required big investment by CSPs, but has not yet translated into revenue upside. The result is that CSPs are focused on maximizing performance per total cost of ownership. Given that energy costs represent 20 to 40% of the operational costs of the network, our customers also want to reduce the power consumption of network elements, both from a sustainability and from a cost perspective. As our customers strive for lower cost per bit, we are supporting them by aiming at technology leadership in several domains, including custom chips to increase performance. This underpins our competitive advantage in IP routing, optical networks, fixed access, and increasingly 5G. Spectral efficiency optimization across the low, mid, and high bands for 5G. Advanced software that enhances system performance, and openness, virtualization, and cloudification. Overall, we believe we can offer a compelling proposition for CSPs that are undergoing a serious squeeze. So, we are moving into an era of critical networks. This era will be defined by the three markets of CSPs, web scales, and enterprises, and by the acceleration of next-generation connectivity and connected digital enterprise. Going forward, Nokia will focus on 4 commitments that define our role in this evolving market. First, we are a trusted partner for critical networks. The trend shows that networks play an increasingly important role for both society and the economy. They underpin more and more mission-critical functions for both consumers and businesses. Value creation opportunities come from a deep partnership with our customers. For CSPs, for enterprises both directly and through CSPs and for web scales. Second, we focus on technology leadership in each of our businesses. Cost and performance remain the top priorities for our customers. They build their critical networks based on a best-of-breed approach. In our highly competitive industry, one based on scale, this technology leadership is also needed to underpin momentum and financial returns. Third, we capture the value shift to cloud and new business models. We see networks evolving to further optimize performance to cost, and we also see new business models developing. We will position ourselves to capture growth opportunities by investing in O-RAN and cloudification and building a winning proposition in security, automation, and digitalized operations. And fourth, we create value with long-term research and intellectual property. Sustainable technology leadership requires us to anticipate, shape, and invest in the next technology windows. Our innovations and research assets and intellectual property will provide both the technology and the financial platform we need in order to be successful. But this is not the full extent of our changes. As I have made clear since rejoining Nokia last August, we are taking several additional actions enabling us to improve our margins and return to growth. Resetting, then accelerating, and then scaling. In October, we announced the first phase of our new strategy, outlining high-level strategic principles alongside a new operating model and provided guidance for 2021. And in December, we provided an update on our strategic focus areas and assumptions for our 4 new business groups in 2021 and over the long term. The actions following these announcements form the basis of our reset phase, and I want to mention 6 of them today. First, we moved away from end-to-end as a cornerstone of our equity story. The shift enables us to look at each of our businesses in their own right, creating value through technology leadership in each one of them. We will still provide end-to-end solutions to customers who want them. But for most of our partners, end-to-end simply did not fit how they wanted to buy. They were more focused on best of breed, so we wanted to align with their priorities. Second, to increase accountability and reduce complexity, we created a new operating model effective from January 1st, which includes 4 empowered business groups. They are arranged according to how customers buy and are tasked with targeting the opportunities presented by the trends I mentioned earlier. The business groups are fully accountable, in charge of executing and developing their respective businesses. They will be responsible for earning their own cost of capital and aiming for technology leadership. And where we lack a clear path to technology leadership, we will assess our options. This will allow everyone to better assess the value of different parts of our business. Aside from the business groups, the new operating model also includes a new customer experience organization to provide a common interface for our partners, a uniformly excellent experience of dealing with Nokia, and a guarantee that the voices of our customers will be heard across our businesses, including at group leadership team level. Another addition is the new strategy and technology organization, which will link our strategy with the technology essential to execute it. And finally, we will have a lean corporate center focused on increasing efficiency and securing the empowerment of the business groups. In our new model, costs and headcount are mainly embedded in the business groups. As a result, around 14,000 people have moved from corporate functions to the business groups. We have matched that leanness in the group leadership team with the previous 17 members reduced to 11, shortening clearance processes and increasing agility. This is the third part of reset. We now have strong, unified leadership in place. Over the course of this Capital Markets Day, 6 members of our group leadership team will tell you more about our future path. You will be very familiar with some of them. Tommi Uitto and Jenni Lukander, between them, have spent almost 40 years at Nokia. They now lead our mobile networks and Nokia Technologies business groups. Federico Guyen and Raghav Sahgal, with long industry experience, now lead our other 2 new business groups, Network Infrastructure and Cloud and Network Services. Marco Wirén, our CFO, joined last year around the same time as me. And Nishant Batra, our new Chief Strategy and Technology Officer, has strong experience in the key technology trends impacting our customers. The other members are not speaking today, but they are critical parts of my excellent management team. And they include Chief Corporate Affairs Officer Melissa Schöb, whose appointment we announced yesterday. Melissa will join on April 12th, bringing extensive experience of communications, corporate affairs, and thought leadership. The fourth part of our reset journey is to secure full portfolio competitiveness in mobile networks. We are making good progress. We exceeded the system on chip shipment targets for 2020 and are on the right track to reach 70% this year, up from last year's 43%. We will also take major steps in our base station portfolio renewal, enabling us to further drive down total cost of ownership for our customers. And in many areas, we are already ahead of our competition, including 4G performance, network slicing, 4G and 5G small cells, and integrated active passive antennas. And Tommi will talk more about this later. The fifth part of the reset is our cost base. Further enhancing product quality and cost competitiveness and investing in future capabilities. Earlier this week, we shared that associated restructuring is expected to result in an 80 to 85,000 employee organization. This is down from the current number of 90,000 and will be delivered over an 18 to 24-month period. The exact size of the organization will depend on market developments over the next 2 years. On a group level, this is expected to lower our cost base by approximately 600 million euro by the end of 2023, ahead of reinvestments, mainly in R&D. In addition, we expect approximately 600 to 700 million euro of restructuring and associated charges by 2023. The sixth and final piece of our reset phase is refreshing our ways of working and our purpose. We promote a culture where our people are open to continuous development, fearless to experiment, and empowered to act with clear accountability. Given all this change, not only in Nokia but in the world around us, we also decided it was time to update our purpose. Because while lives may be getting longer, healthier, and richer, the world is facing fundamental challenges. Pressure on the planet is increasing, productivity is stalling, and access to opportunity remains stubbornly unequal. Technology is central to the solution. Responding to climate change through more efficient use and reuse of the world's resources, restoring productivity by digitalization physical industry, and providing more inclusive access to work, healthcare, markets, and education. Meaningful interactions driving human progress. With that in mind, our new purpose at Nokia is to create technology that helps the world act together. With our customers, we create the critical networks that bring together the world's people, machines, and devices. And everything we do in our business will contribute to this aim. Those 6 actions together comprise our reset phase. Once that is complete, we will move on to accelerating our performance. We will increase the digitalization of our own operations, And our improved portfolio competitiveness and investments in technology leadership gained through the reset phase will provide margin enhancement and growth opportunities through new products and services. After accelerating, we scale. That means setting our sights on some of that new value that stems from next generation critical networks that can integrate O-RAN, vRAN, cloud-native software, as a service business models, and so on. Our business group presidents will discuss in more detail what this journey means to them. With that in mind, let's move on to financials. Our views on 2021 comparable operating margin remain unchanged since October last year. We continue to forecast a comparable operating margin of 7 to 10% for this year, with sales between 20.6 billion euro to 21.8 billion euro. Looking further forward, we see ourselves growing faster than the market in full year 2023 and achieving a comparable operating margin of between 10 to 13% in 2023. And finally, our targets for a central part of sustainable value creation, sustainability itself. On climate, we recently announced that we will reduce emissions by 50% across both our own operations and products in use, so-called Scope 3, between 2019 and 2030. Our new recalibrated science-based targets fulfill our commitment to align with a 1.5-degree global warming scenario. On integrity, this year we were recognized yet again as one of the world's most ethical companies by the Ethisphere Institute, and we will continue to strengthen our position. And on culture, we want to prioritize greater inclusion and diversity. And just as one example, we are targeting an increase of female hires in global external recruitments. So to conclude, let me repeat the key commitments that will take us to the next level. We are a trusted partner for critical networks. We focus on technology leadership in each business. We capture the value shift to cloud and new business models, and we create value with long-term research and intellectual property. We have a three-phase journey of reset, accelerate, and scale that will help us deliver on those commitments and return to sustainable, profitable growth. I appreciate that I covered plenty of ground over the course of my presentation. So now I would like to hand over to our other speakers for a bit more detail on our journey. Starting with Nishant Batra, our Chief Strategy and Technology Officer. Thank you everyone for listening, and Nishant, over to you.